Hi everyone. Today let's talk about the stock market and how it can stay flat for a very long time. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So losses in the stock market can stay with you for longer than you think, and for most investors the stock market is their bread and butter. They buy and hold for the long term, and they make on average a 7% return, and they are better than just about any other asset in the world. But buying at the tops is not always a smooth ride, just like we saw in the 1930s as well as the 2000s. You can see here 1890, lost decade here from 1930 to 1950, 1970 to 1990, and then again from 2000 to 2007, almost 100 months there without a new all-time high. So it is absolutely possible to see long periods of time where we do not get all-time highs, and I think you could make a pretty decent argument for that in this current time period. So how do we avoid this? You can absolutely use covered calls, option strategies to hedge against it. That's what we do here on the channel. Dollar cost averaging, also a good potential opportunity there. And some of the metrics that we talk about in this video absolutely depict a market that is extended to the upside and will see significant losses eventually. Moving over to fear and greed, we finished the week at a 38. The previous close was a 43, and a week ago we were at 45, so this is continuing to trend down despite the fact that we are at all-time highs here on the S&Ps. We're still in extreme fear for strength, breadth also extreme fear, while being in extreme greed on the put-call ratio, and volatility really hovering in neutral. We did see a slight bounce there on the Friday session, and then still extreme fear for safe haven demand and junk bond demand. So markets are mixed despite the fact that we are at all-time highs. Moving over to the AAII Sentiment survey, bulls stepped up to a 44.6 after being at 39. Neutral, still basically in that 29 area, and then the bears got squeezed down to a 25.7 after being at a 32. I think that's probably going to step up this week based on the price action that we're seeing. I can't imagine that we're really going to go that much higher. I feel like we've priced in all of the AI plays. Apple has moved higher finally. Everything is at full valuation in my opinion, but it'll be interesting to see how this plays out. This is still a pretty decently high level on the AAII survey for the bulls. Moving over to seasonality, you can see we did not really see this dip low that we were supposed to get on the 13th. The low of the month is supposed to be around the 24th or the 26th. We'll see if that plays out. This week we're on now is supposed to be relatively bullish, but mostly flat into a weak period towards the end of the month before that rally on the 27th or 29th. So neutral to potentially slightly bearish as we go into this week and next. Moving over to the calendar, you can see the Monday for triple witching is typically bullish. We also have retail sales. 19th is off for Juneteenth. And then we have the Philly Fed survey and then triple witching here on the Friday. So it's going to be a big week for options as well as some economic data there on Friday as well. Moving over to the economic calendar, really nothing here for Monday, some Fed members speaking. Tuesday, you got CPI for the Eurozone, core retail sales at 8:30, headline retail sales there as well. Those are expected to be flat for the core number and a decent step up for the month over month on the headline number. So we'll see if that plays out. I think the U.S. consumer has been a little bit weaker here recently, but we haven't seen too much of that in the data. So this will be another interesting data point. Again, Wednesday is closed for the federal holiday. And then looking at Thursday, Philly Fed manufacturing, 4.8 is the expectation. Pretty decent step up from 4.5 there. 5-year tips auction there on Thursday as well. Fed balance sheet continuing to taper lower, getting pretty close to that 7 handle there on the trillions. We'll see how that continues to play. And then for Friday, we do have global composite PMI, global services PMI, existing home sales expected to step down just a little bit, and then the leading index, and that'll close it out for the Friday session. Moving over to Max Pain, you can see the options already almost at 4 million. Put call ratio quite a bit lower than it was this week at 2.29. Still decently high. Max Pain is all the way down at 510. That is definitely concerning. First put wall is at 520, so that's also projecting some downside. Decent puts at 530, but really no support until we get to that 530, 535 area. So that would be a 1.5% down move. Definitely looks a lot more bearish this week than it did last week. can see calls there at 530, calls at 540 and 545. So significantly more bearish on the max pain as we head into this week's trading. And then looking at max pain for the Qs, first put wall is at 460, decent puts 465, 470, but call wall 465. So again, this looks super bearish to me. Total options just under 3 million for the triple Qs, put call ratio at 1.34, so much lower than we saw this last week. To me, everything looks pretty bearish on max pain as we head into this triple witching week. Moving over to the charts, starting off with the SPX, you can see we are at that top trend line. Seems like this is where we're going to see a rejection. Last time we saw it in March of 24, got 3 bearish weeks in a row, pulled back to the 21 EMA. If we see that again, the 21 EMA is trading around 5150, which is very close to that max pain area. I don't know necessarily that we're going to get there in one move, but this is definitely extended, clearly where we rejected last time. You can see this trend line actually goes all the way back to here, marks the bottom on that 9 May of 22, marks the top here in September of 22, again, for basically that whole month. And then we touch that trend line here in March of this year. And now we are touching that trend line again. Upside, probably done. Momentum is bullish. RSI, still that clear divergence. You can see that high, much lower high, despite the fact that price action is much higher. So again, definitely extended, clear resistance in my opinion. We'll see how this plays out this week. Then looking at it on the daily chart, same structure, high, higher high. RSI is not as bad of a divergence, but the weekly chart is the one we were looking at. That has clear divergence. Momentum, you can see that divergence, much higher momentum, lower momentum now, despite those higher prices here. So that's definitely concerning. And it just seems like this is where you're going to get that rejection in my opinion. In terms of levels, you can see 544 is the high from Wednesday, and your current support is 540.34. If that structure breaks, then below that I have 535.72, and then this trend line sitting all the way down here, 527.50. If max pain is correct, we have some much lower lows to go, but we'll see how it plays out this week. But that short-term trend doesn't look nearly as extended as it did on that weekly chart. Moving over to the Tasty charts, you can see that upper ATR is at 555, 550.52. We didn't quite get there. We are above that second ATR, headed towards that third one. We'll see if we can this week. Again, I still think there's some bearishness to come. Momentum has been bearish for a while on this weekly chart, but we haven't seen the follow through on that momentum. It's going to happen eventually, just hasn't happened yet. And then looking at that daily chart, you can see we hit it on Wednesday. That upper ATR was up around 445, 420. Upper ATR now is 545.40, so right in that same zone of the trend that we talked about. Momentum on this looks significantly better. Seems to be swinging to the bull side, so that is a bullish indicator there. There's just not a lot of upside potential, really just that $3 or so, about 0.75%. No volume supporting this rally. We haven't seen volume for a while. Last time we saw volume was at these previous highs and in that dip low, so you knew that this was probably going to get bought up. You can see massive volume there on the 19th of April at that 89 EMA, and then we rallied back up to the upside. So see how it plays here. I still think we're probably going to see a bit of a down move. ATR support is down at 528.11 on the daily chart. Moving over to the NASDAQ, on the weekly chart here, you can see we were grinding along this trend line, and then we clearly broke out pretty powerfully, 3.47% on the NDX to the upside. Momentum bullish, RSI bullish. Unlike the SPY, there's really no upper trend line that we're watching right now. Could maybe move this down here. Makes a little bit more sense. That would put the next trend resistance up at 20,237. For the next candle would be 20,367. We did close on the top of the candle, so that could be a little bit bullish on the NDX. You can also see that the volume was pretty powerful there. RSI getting back into overbought conditions on the weekly chart, so the NASDAQ actually looks quite a bit more bullish than what we saw on the SPY. You can also see that long-term trend sitting up there at 20,600. Those are very close together. Usually you would expect an overthrow to that upper trend line. See how that plays. I actually did a quick double check of that trend line. It makes more sense for it to be right here, which actually gives you much less upside potential. That is now sitting at 19,826. You can see very important, marks the high here in January of 22. Again here in March of 22, marks a clear bottom in May of 21, marks a clear top in August of 20. And then if we go all the way back here, you can see very close to the top in December of 2004, marks price action in October of 2003, marks a perfect bottom September 2001, another bottom in May of 2002, and now here we are once again getting very close to that trend line. Absolutely expect to go a little bit higher, touch that level, and then reject, which actually does seem a little bit more in line with the SPY price action. And once we do reject from there, I do expect it to be a little bit dramatic, especially based on what we saw on Max Pain. Moving over to the daily chart, you can see that same trend line sitting up there. Still looks bullish, still looks like we have about 0.8, 0.9 potential upside, so about a 1% move, just short of 1%. Momentum RSI still super bullish here. Everything looks good in that short-term trend. And then looking at the Qs, same setup. We're above my upper level here. We broke out on that Friday. 477.69 was that level. Momentum and RSI, everything still looks super bullish. If you wanted to add a level at the top of the candle, you could. 479.26 is that level. It's really tight to my other one, so I'm not going to add one. But trend, we're above all the trend lines, even the short-term ones. And everything on the NASDAQ still looks bullish. Moving over to the Tasty charts here, you can see we hit that level. We bought into the shares at the 8 EMA right here on this up move. And since then, we've had a really strong up move. Upper ATR is at 483.91, which is in line, shows just a little bit more upside, just short of 1% upside until we hit that trend line. Upper ATR right in line with that on the weekly. Makes sense that we would get to that level. And then looking at the daily chart here, you can see we are already extended. Doesn't mean that we can't go higher or grind along this level, pull back in time potentially. Again, similar to the SPY, we're seeing that volume weighted MACD swing to the bull side, which again is a bullish indicator. ATR support is 462.29, right in this zone here, above the 21 EMA. That doesn't happen super often, but again, very little volume, not really supporting this rally as we push to all-time highs. And like I said, I feel like we've priced in all of the catalysts that we could potentially price in right now. I think we're going to get extended at about a 1% up move this week. Moving over to the Russell here on the weekly chart, you can see it's at a critical level, 198.75. Need that level to hold. Could pull back to the 200 SMA at 195. That could be another interesting level. I have a level at 195.15 as well. So right in this zone could be interesting. But if this starts to break here and get below that 55 EMA at 191.42, then this is probably headed much, much lower, probably to these lower trends. Got a trend line here at 188.50 and then one much lower here around that 171.50 level. That's the level that we touched here in October of 23 before the most recent rally that we had. We were watching that level very closely. We had trends here, very important level, 164. And it wouldn't be crazy to say that we could get into this zone here, break through to that, and then push down to the 171 area. But right now, we're still hanging in. 200 SMA still there as potential support, but really I would prefer to see that 198.75 level hold. Momentum, bearish, RSI bearish, which is concerning for sure. And then looking at that daily chart, you can see 144 EMA. That's what we're banking on right now. 198.51, right in line with my support level. And then the 200-day moving average down at 195, pretty much right on top of my level 191.89, which is the low here from 19 April. So we'll see how that plays out. Important level here. If not, it's probably going about another 5 to 10% lower from here. Moving over to the Tasty charts, you can see important level here at that 34 EMA 197.23. Again, need this to hold. Last time we did get all the way down to that 55 EMA at 193.97. This is the weekly chart, so right here, certainly possible. We are below the midline, which is not a great indicator either. Still bullish conditions on the weekly chart, but momentum clearly bearish. So might see more weakness. This has been 4 weeks in a row of bearishness, which is not super great either. And we haven't really seen any volume spikes to potentially end this downtrend, which is not good either. So most of the indicators still looking bearish on the IWM. And then moving over to the daily chart, we are down at that lowest EMA. That is also a 144 EMA on this chart. So 144 EMA at 198. Need that level to hold. You can see momentum starting to step back towards the bull side. Interesting. Did see a bit of a volume spike on this sell candle, which was at a high, which is not great. And then you can also see on the daily chart bearish conditions. So definitely not super great there. Lowest ATR band sitting at 195.08. Usually when you hit that level, the fall at least starts to slow. You can see we got very close here and then you touched it on 16 April. Very slow down steps as you grind along that level. Could absolutely go lower once you touch it, but usually the fall starts to slow down in that zone. So 195, you would expect it to slow down if we did get into that zone. But like I said, still would like to see that 144 EMA hold. Moving over to the Dow, you can see it's basically lost all momentum. It really hasn't broken down yet, but momentum on the MACD, definitely bearish. RSI, definitely bearish. Volume picking up on that selling candle. We're below all the short-term EMAs and SMAs, 21 and 9, as well as VWAP. 55 EMA on the weekly chart, sitting all the way down at 364.49. Again, very little volume through here, so you would expect it to move quickly down to that 55 EMA once this starts to break down. And really everything on here says the risk is definitely to the downside and minimal reward to the upside, in my opinion. Even if you held this level, you could push to 198.76. That would be the top of markets, in my opinion. But if this structure were to break, you're probably headed down to the 360s and potentially even lower than that, maybe down to this previous high from 31 July. That would be down in the 356 area. So a potential $10 up move, in my opinion, to a potential $30 to $40 down move as a risk. And then looking at that daily chart, you can see we're still hanging in there at the 144 EMA. That's the last one that is still hanging in there at 382.03. Haven't touched it yet, so you would expect that to continue to hold as a potential support zone. You can see we got close at the end of May. We're headed towards that level again, and it's right in line with my 382.20 level. If that breaks, based on the daily chart, you would expect the 200 to hold. That's down at 370.09. So we'll see how it plays. Again, still sideways consolidation with that one potential support, and it looks a little bit better than that weekly chart. Moving over to the equal weighted S&Ps, looks very similar to the Dow, except for that second peak was actually lower than the first peak. So you have a high, lower high with a low, waiting to see if this comes to a lower low. So far, that 21-week moving average has not broken, 163.52. We'll see if that continues to hold. Seems unlikely that it will. Seems like we're just waiting for these EMAs and SMAs to consolidate, and then we'll get a break down to that 55, all the way down at 153.96. So seems like this is just about coming to an end. I've kind of been cautious about it for a long time, but markets seem ready to move lower, especially with the max pain charts that we saw previously. And then looking at the daily chart, similar to the Dow, haven't touched that 160.28 level. That's the 144 EMA, right on top of my 160.31 level. You can see that marks the bottom here on 1 May as well as 2 May. So I would expect at least a move to that 144 down at 160.28. And then we'll see what happens after that. If that breaks, you got the 200 sitting down at 155.21. Moving over to ratios here, we have the SPY Russell and NASDAQ SPY. NASDAQ, top performer. Russell, bottom performer. Makes sense. The Russell charts look pretty awful, to be honest. And this is a super high level for the SPY Russell. The Russell will come back eventually, in my opinion. But last time we were in this zone, you can see we broke out here. Just need to start to add some levels, to be honest. Let's go ahead and add one here at 278. Marks the bottoms back here in May and June of 2000. Last time the SPY was so extended above the Russell was back here in the 2000s. That was your dot-com bubble. Eventually markets came down a lot. The Russell outperformed for many, many years after that. You can see it peaked back here in April of 99, and it did not bottom out until March of 2011, and then here in March of 2014. So the Russell outperformed for a very long time during that period, and this has been definitely SPY outperformance since then. February of 14 was the low. We've continued to go much, much higher since then, but eventually it will be time for the Russell to make gains again. And then looking at the NASDAQ SPY, clear breakout once again on the NASDAQ SPY, and this is new all-time highs for this ratio, 3.62. Closed on the high. Seems like this is going to continue higher in my opinion. RSI bullish, momentum bullish. NASDAQ is the place to be out of the major indices. Moving over to SPX divided by the M2 money supply, you can see we did break another level here, 25.91. We are at 2603. Now we are headed towards that 27.25 level. Again, I don't think we're going to get there. You can see momentum. You can see momentum is bullish, but RSI, big divergence here from those March highs to the current price. RSI much, much lower despite the higher price action. And going back here, you can see these are levels that we have only seen during the dot-com bubble. We're at 2603, so we're here. You can absolutely go much higher. The high for this ratio is up in the 32s, 32.5, right in that range. Doesn't mean that we can't go higher, but understand this will come down in my opinion. And then 27.25, you can see marks the low here from October of 99, marks a clear top in March of 98. So those are the levels that we're talking about on this chart. Historic price action absolutely can continue to go higher, but eventually it will come down in my opinion. Moving over to top gainers for the week, we have Adobe and Broadcom. We've been talking about them for a while. Adobe was up 12.5% or so. This has been downtrending since around 633 down to 445. Big up week here coming off of this trend line, coming off of support. Pretty good indicator of when you have a critical level, overthrew that to the level and then rallied higher. Trend resistance is up at 575, probably going to get there based on this price action. You can see we've seen this before, got all the way up to almost $700, fell down to 270. Absolute bargain there in September of 22. And since then, it's more than doubled up to these most recent highs. And I do think Adobe is probably going to head back towards that trend line in the 570s. So that would be about a $50 gain there, about 10% higher. And then Broadcom, massive move, 23.35%. You can see it here, hitting this trend line, marked some lows, pull back in time, held the 21 EMA, rallied back up to this new level. This is all-time highs here for Broadcom. Hard to say where it could be going. Massive week. Eventually this will come back to earth in my opinion, but this is massive. Wouldn't want to get in the way of it. You can see a little bit of divergence on the RSI. So you can see clear peaks here, much lower RSI read despite a much higher price action. There is volume to support it, so that's interesting. But overall, both of these look bullish going into next week, in my opinion. Moving over to the Mag 7 on the weekly chart, this was another all-time high. We added a level at the wick high, 265.08. Pulled back from that level a little bit, momentum RSI bullish. You can still see RSI still has divergence, so the high of RSI was back here in February. Much higher prices, lower RSI, so that is also concerning, but overall this trend is still very much intact. Seems to be accelerating a little bit. You also have a trend line sitting up here at 285, which could be interesting. You can see that trend line marks a bottom in June of 22, marks the top here in July of 23. Now we are headed towards that level again. We'll see if we can get there. Overall, Mag 7 still looks pretty bullish in my opinion. Moving over to Apple and Microsoft, you can see Apple had a huge week, 7.9% higher. Momentum RSI still super bullish here. I found a trend line. It's a little bit convoluted. You can see the low back here in June of 22 marks a high in February of 23, marks the high again in January of 24. And now we are right on top of that trend line. Again, pretty convoluted trend line. This chart has been pretty difficult over the past several years. It's really been sideways choppy, then you had a breakout, sideways choppy, now you have a breakout again. See if it can hold those gains or if it's going to give some of that back. We'll see how it plays. And then looking at Microsoft, again, all-time high here as well, 4.42%. Looks very good. Momentum bullish, RSI breaking higher. And then you have trend resistance up around that 450 area. We've been talking about that for a little while, so about another $7 or $8 of potential upside there on Microsoft in my opinion. Moving over to Google and NVIDIA, these had decent weeks here. Google was up 1.39%. NVIDIA obviously did very well at 909. This is also hitting that longer term trend line here, so grinding along this level in June and July of 23. Hit that level again in March of 2024, and now we are here again in June of 2024, so touching that level. Very extended for sure, super high on the RSI, but it is a very powerful stock, so could certainly break higher, but this would be outside of the structure. And then looking at Google, you can see we're not grinding along that level yet. Seems like we could get there. That trend line marks the top in February of 21 and the bottoms here in March of 22. So it is an important trend line, not quite getting to those levels. Momentum is starting to fade. You can also see that shorter term trend line marks the top here again, and now we are at that trend line. So NVIDIA looks a little bit better, but of course we are hitting those upper ranges on both of these stocks. Moving over to Amazon and Meta platforms, you got Meta up 2.27%. Expected this to be bullish, and it is. Momentum ticking towards bullish. RSI is a little bit concerning here. You can see we're right at the SMA. If it was going to reject, you would expect it here. I still think we're probably going to hit that 520 level, so that would give you a little bit of upside. Touch that level and then reject would not be great, but that is my expectation. I think we'll touch there. We'll see what happens at that point. And then Amazon was negative on the week, 0.35. It did look a lot better going into the week, and sure enough, it was. almost hit the level 188.61. High of the week was 188.35. So within 30 cents of that level. Momentum bearish, RSI bearish. Still waiting for these EMAs and SMAs to consolidate. So still could play this as sideways choppy action. But once we get below that 21 EMA down at 178.39, then I think this is probably going to break down pretty dramatically and head back towards that highly traded zone and the 55 EMA down at 152.96. Moving over to staples and discretionaries. Negative on the week for staples, still positive for discretionaries. Staples was down 0.98. Momentum continues to fade. Broke below the RSI here, so that's not great either. Still technically a bull trend above all the EMAs and SMAs. Level of support would be down at 75.40, which is right on top of that 21 EMA, so probably going to see a little bit more bearishness here. Could also say high, lower high, which is not great. And then looking at discretionaries, still holding this short-term uptrend, still cannot get above this level here at 178.51, continues to struggle. It did touch 180.10 for a moment and then pulled right back to that level. If this is going to break higher, needs to get above this and hold, push to 180.10, and then if we can get above that, 185.36 would be the next level. Overall, both of these look a little bit neutral, but staples looks worse and discretionaries looks a little better. Moving over to transports and technology. Transports was negative 1.66 on the week. Continues to touch this trend line. It's kind of a convoluted trend line as well. You can see it's a high here in June, marks a low here in January of 24. And then marking these lows here once again, touched that level, found some support in that zone. 63.22 is my level. We did close below the 55 EMA, which is not great. And then this short-term downtrend continues to hold. So that's depicting lower markets. The Dow has held up quite well while the transports continues to fall. Eventually those tend to come together. So you would expect the Dow to follow through to the downside eventually. Right now, I think Apple is holding up the Dow. And then looking at technology, obviously a massive week for them. 5.6% hitting this trend line. We've overthrown it a couple of times. Eventually we do pull back. We haven't closed above it on back-to-back weeks ever on this trend line. So it's an important one. Based on that, you would expect a pullback off of that level. Certainly could overthrow it a little bit higher and then close back below it. But momentum, bullish, RSI, bullish, but also clear divergence. High on RSI was back here on 5 February. And now we have higher prices with weaker strength. So we'll see how it goes. Again, upper trend line, important, and that's where we are now. Moving over to oil and gold. Oil was positive, 3.87. Got back to the highly traded zone here around that 78.50 area. It's right at the EMAs and SMAs, so we're stuck between the 200 and the 21 EMA. Momentum, stepping to bullish. That's a good indicator. You can see here, consolidation, momentum building, and eventually this did break higher, so could be a higher low setup. Does actually look pretty decent. Still could be volatile. We've seen it here. Consolidation, big up candle. A little bit of consolidation, up candle. The next week was terrible, down 7.5% or so. But then we hit the 200 again and then followed through to a new high. So doesn't mean that this is going to break through immediately, but this does look much better now. Coming off of that 73 level, big wick rejection. If you touch 73 again, that would be an interesting buying opportunity in my opinion. And then looking at gold, turned a positive week at 1.95%. Momentum bearish, RSI not great. Definitely consolidating, definitely coming off of a high around 225. Still holding the level. We closed below it 2 weeks ago, and then last week we got back above it. 214.65 is that level. If it breaks back below this, you're probably headed to the 21 EMA there at 205.81. And then if that breaks 202.25 is my next level. That's the high consolidation from March of 24. And right now this does look a little bit short-term bearish in my opinion, but I would expect it to find some support in here eventually and then break to new highs depending on what we're seeing from the FOMC. I think gold really needs at least one cut to continue to go higher. Moving over to RIOT and Marathon, the crypto miners here. We got a bullish week on RIOT, 8.3%. We talked about almost touching my level here at 8.78. Held that level, pushed to this trend line. If we can get above this and get a breakout, maybe we're pushing back to that 14 area. RIOT seems to be in a solid consolidation. Usually when that happens, you do eventually get a big move up, similar to here, move up, consolidation, move up. So RIOT probably in a spot where it's going to break higher, something to watch there. And then Marathon, this is still overall an uptrend. You can see it clearly continues to go higher on each of these moves. It's finding support at 1878, touched that level this week, held the level, was still positive on the week, 1.04%, but it still has this downtrend line, short-term downtrend line, needs to get above that and push up. If it pushes, that trend line for the mid is up around $30, so that would be about a 25% move. I do think that that is a possibility, but it really hasn't made any strong pushes yet. Positive week is a bit of a change. Momentum continues to build to the bull side. RSI breaking it back above the SMA, so honestly, both of these look quite a bit better here this week than they did the previous 2 weeks. See, both of them had 2 bearish weeks in a row. Both of them turned a positive week. If I had to pick one, I would probably say RIOT is a little bit better trade. Once we break this downtrend line, it's probably going to push aggressively. Marathon still might have a little bit more consolidation before it pushes back to that 32 area. Moving over to Breadth. Breadth on both of these charts, 20 and 50 day look awful. 11.4% and 11.99% to the downside. Didn't make a new low. That's still 2 weeks ago, 27 May week. But this is a big close below 36.60. Haven't done that before. So it's a new low close. Typically, that's probably going to push down to that 16 area in my opinion. So could get 1 to 2 more weeks of bearishness, something to watch there on the S&Ps. And then same deal here on 50 day. This is a new relative close. This is a new low relative close. Momentum bearish, RSI bearish. Still didn't get below the 40 level, and we have tested below that. But over the last 4 weeks, we've been going lower. If that 40 level breaks, we're headed to 32.20. And then you can see this wick that we got on that 15 April week. That was the low down around 26. I think it's possible we get into that same zone over the next couple weeks. Moving over to 200-day breadth. 200-day breadth also closing on a new low. Not just relative, this is well below all these previous lows going all the way back to January. Last time we were at this level was back here in December. So clearly making lower lows, momentum bearish, RSI bearish. Eventually this is going to break down aggressively. In my opinion, we've been consolidating here for a while. So the stage is set in my opinion. You can see eventually does move lower, can still consolidate for a while, and then this breaks aggressive. Similarly here, consolidation broke to the low. So seems like this is going to break lower in my opinion. Still have some support in that 62 area. If that breaks, you got the 144 sitting down at 52.95, and then if that zone breaks, then 36 is probably in play. I don't think that is going to happen all in 1 week by any means, but it does seem like that's the trend here over the coming months. Moving over to the dollar has been bullish for a while. You can see here the lows were back in June of 21, rallied all the way up here to the 113 area. That was the October of 22 low. Then we pulled back dramatically, but look here. So you have a low, higher low, higher low. And zooming in, this looks a lot more bullish here once again, coming off of this short-term trend. We're at the level, technically above it on the close, 15.51. So we're above the level on the closing basis. I just can't imagine that this is going to be bearish next week. I think we're headed to 106.8. And if that happens, that's going to be quite bearish for markets. It does seem like this might be accelerating here. So if this accelerates and breaks out, there's no reason that this could not push to these previous highs. And that was absolutely terrible for markets when the dollar was rallying so aggressively. And if this starts to push into that zone, we could absolutely see a change of trend on markets, especially considering how bullish they've been and how extended they are to the upside. It's also worth mentioning here, RSI, clear breakout back above the SMA. And this has also been establishing higher low, higher low, higher low. And if that trend is going to continue, you have a high, you would expect a higher high on RSI as well. So this just looks super bullish in my opinion. Moving over to the yields, 2-year and 10-year. These hung in there pretty well. These were both pretty bearish on the week, but they're still hanging in there pretty well at these previous lows. 2-year still in this same zone. 10-year on the other hand did have a new low close. Let's go ahead and look at that on the weekly. Pretty big bearish move there, 4.78 to the downside. We're below all the short-term EMAs and SMAs, momentum bearish, RSI bearish. And then looking at the 2-year on the weekly, same thesis here, below all the short-term EMAs, momentum continues to fade, RSI breaking down. Seems like yields are set to go lower, so pretty interesting. Dollar going higher while yields are going lower. And that's probably what's holding up markets so well, even with the bullish dollar. Yields have been falling, and that tends to be bullish for equities. Moving over to bonds on the weekly chart, J&K threw a big wick, hit my level 94.82, pulled back from there, still at this level in this consolidation. No big changes, still neutral on that. And then look at TLT here. big candle to the upside. Those kind of candles are usually met with more buying. Ended up at 3.46% to the upside, probably headed to that 96.50 area. It's above all the short-term EMAs and SMAs. Next one is the 144, all the way up there at 109.82. This has been a very dramatic downtrend, so it's going to take a while for these to consolidate and get into a true uptrend. But in the short term, this seems very solid here. Low, higher low, higher low. Breakout above the SMA. If it can hold that, probably see a swing up, maybe a higher high off of this high. Eventually, you would expect a pullback, find support at a higher low. That's your big buying opportunity. And once we push from there, then it's going to be dramatic, in my opinion. Push to that 200, up around the 120 area. TLT on the macro looks like a good buying opportunity. I've been saying it for a long time. Long-term bonds are in a good spot right now. I think yields are going to come down over the coming years, just like the FOMC has been saying. And that should prop up bonds at least for a multi-month trade once that narrative starts to come true. Moving over to the VIX, it was a little bit positive, 3.6%. And look at this momentum. It did step up a little bit. It's been consolidating, but that's a step down towards bullish. We'll see if that continues to play. You can also see these rising levels. That is also a bullish indicator. So you have a low, higher low, higher low. Looks like it's setting up here. See how that plays. It's at a critical low level. That's usually where you see consolidation and a break higher. So everything here says the VIX is probably set to move higher at least a little bit, at least for another spike potentially into that 1850 area, which does fit with the overall thesis. Clear consolidation we got here 5 weeks ago. 5 weeks of consolidation. Could see a steady build, could see a big spike. Either way, the VIX is signaling complacency, and I think it's ready to pop. Moving over to my accounts, I did make some money on the week. You can see we are at 137.7, almost to 13,000 in my main account. Roth, basically flat. That account is really based on the Russell, which is negative on the year, so it makes sense I'm down just slightly there. Really need to find a better vehicle for the Roth. The Russell has been abysmal so far this year. Like I said on the ratios, the Russell will be a better vehicle at some point in the future. It's just been a tough year for it. In terms of current positions, I do have a short-term covered call at 199. There's about 80 cents left on that. Then I'm playing some defense on these puts, trying to roll these back. We'll see how that continues to play. If that structure breaks, I'm going to be out of all of these positions, and it certainly could. And then looking at the Qs, just my covered calls here, 471s for the Monday session for $5 credit. We are way above those max profit, so probably going to roll these out. We'll see how that plays. If the NASDAQ starts to tank, just like those longer term charts showed, as well as the max pain showed, I'm going to be out of all of these positions or potentially selling some calls to profit from some down moves. I don't like to be purely short too often, but this is an interesting case. Max pain, super bearish, markets at all-time highs, hitting some key and major resistance. We'll see how it plays out this week. So right now, slightly bullish, playing some defense, but could very well flip to bearish this week or maybe next. Let me know down in the comments section if you think this market is historically overvalued and if you believe it will come down and stay lower for a long period of time, or potentially that the AI revolution is going to send markets to new all-time highs consistently for the coming period. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.